let's get back to our top story. This Tuesday, the 18th of July, Skybank, one of Nigeria's Tier 2 listed lender on the stock exchange, issued an 8-paragraph statement in the newspapers saying that the management of the bank is preparing for the future and has appointed a very reputable investment bank as financial advisor for its proposed recapitalization program. Simply put, Skybank is heading back to the market for a recapitalization. This announcement is coming just as the bank says it's looking at 1 year after the Central Bank of Nigeria appointed a caretaker board for a management team for the lender. The advisors, according to the statement, has identified the various options open to Skybank for recapitalization, and proposals are being considered by the Central Bank of Nigeria. Accordingly, if you're looking for the 2016 financial statements of Skybank, the bank says it's now with the Central Bank for approval. We're not sure when that will happen. 2016, while we're looking at the first quarter, second quarter, the first half 2016, we'll see how this pieces out for Skybank, whose 2016 financial statement is not yet been released for investors and the analyst community to chew. Meantime, the bank went on to say that given its financial position, that is of the bank, it has fully divested 4 local subsidiaries and realizing a total of about 6.2 billion naira, and is in the process of divesting from other subsidiaries. And of course, as far as the bad loans are concerned, the bank says it has clawed back about 60 billion naira and from bad debtors or chronic debtors, and the settlement and restructuring agreement is being figured out with the others. Let's squeeze this in very quickly. Yesterday was when the FMTQ OTC admitted the first tranche of the Chapel Hill Denham Nigerian Infrastructure Debt Fund. Of course, that we were all over that yesterday, but part of the conversation was the regulation around this particular type of managed funds, the first of its type in Nigeria. So it was a new one, not just for the market, but also for the regulator, which was the Securities and Exchange Commission. And one of the directors of the SEC was in attendance, had a very little chat with her at the end of the event, of the live event. Ojone Umoru, who is the Assistant Director and the Divisional Head of Investment Management for the SEC, has a few words to say about what the Commission did and will continue to do with this type of managed funds. Let's take a listen.
From the beginning, the Commission reviewed rules a couple of years ago to provide for infrastructure debt funds. Initially, we had our rules only covered infrastructure funds generally. So based on a request by the Chapel Hill Management Office, we reviewed our rules and provided for infrastructure debt funds. That review allowed them to come with the application, which we reviewed. So we did the review process. We did approval process, approved for the fund to offer to the public to raise money for the fund. So as regulator, we had the pre-roll, which was before the fund was even put together and documents submitted. And then when it was submitted, the review and approval process, and we will have an ongoing review and monitoring role to perform as part of our regulatory function. We want to see essentially that the promoters of the fund have the requisite skill and experience to float and manage this fund. We have the responsibility of protecting and investing public, whether they are retail or institutional investors. So a key role to ensure that investors' interests are protected at all times, to ensure that the assets of the fund will be secured. So we're looking out to see that if they are trustees to the fund, everyone is proper and fit. The fund assets will be kept by custodian, who of course have consented to maintain those assets, and the relevant agreements have been entered into by the relevant parties. Post-listing, we will be reviewing, as we review any other listed company, but for the fund, it goes beyond listing. So the fund manager has a reporting requirement to make certain returns to the Commission quarterly, sometimes biannually and annually. So we have continuous monitoring of that, which will include all of the fund processes, including its listing. So we are also looking to ensure that it complies with its listing requirements and it's in compliance with every regulation at every point in time. For us, it's the first infrastructure debt fund, as I mentioned. We've had other infrastructure funds mentioned, but this is unique in its own way.
Okay, let's, that's, of course, the Assistant Director in charge, the Divisional Head of the Investment Management Desk or Unit at the SEC, Ojone Umoru. Let's move on, of course, deepen this a little bit and make it broader. The man who is the Group Managing Director of Afrinvest West Africa is live here in the studios with us. Ike Chioke, good morning.
Good morning.
It's good to have you here, sir.
Thank
we
you.
appreciate your time. It's been an interesting first 6 months of the year. So as an investment banker, a chartered broker, or securities market individual, put the macroeconomic environment of the first 6 months together for us and how that had actually impacted on the various asset classes and the markets.
Interesting time. I think what we've seen is that the economy is improving. We saw a contraction of as much as 1.2% by Q4 2016. We've seen a decline in the contraction as Q1 2017, only 0.5%. And we expect that the improvement can continue so that by mid-year, by the time the June numbers come out, we should see some kind of positive trajectory.
Very quickly, because of time, what did the fiscal authorities and perhaps the monetary authorities together got right in the first quarter, or was it part of the spillover of 2016?
Wasn't so much. There are some other fundamental changes. You see that back in 2016, we had a Niger Delta militancy issue, so that contracted our oil production volumes to about 1.6 million barrels per day, in addition to the low oil price environment. Now we've inched up to between 1.8 to 2 million barrels per day. That's helped, and that accretion, that increase has also led to the accretion you've seen in the external reserves, which has gone up from $26 billion as at end of the year 2016 to $30 billion at half year 2017. With that, the central bank has then become sort of more constructive in managing the foreign exchange environment. You saw the introduction of the investors and exporters window in April. That again itself, created a sort of more